Hello and welcome to Jazz After Dark. How you doing out there? All is good? We'll be enjoying some more of this Broken Barrel Cask Strength. Not my favorite, so I'm going to try to pawn this off on the neighbors. I just have a little bit here tonight with you guys. Not my favorite. Not my favorite there, but it's not bad. It's just more on the basic side. Spicy, really spicy. Without any I don't know. It kind of reminds me more of like the Scotch side of things. If you watched this yesterday, then you got the full, more detailed review there. But I hope you're enjoying yourself tonight and able to maybe enjoy a drink or two and have a little peace and quiet, learn about your dough. This will be a quick one tonight. This is actually something that I shared on the closing beat yesterday. And I really want to put this in a visual format that allows you to go, well, yeah, the world is a little bit weird right now, but the markets are just kind of doing better than they should be. And I'm not a perma bull by any means, right? I would like the markets to pull back, and they will pull back, but they're not going to just fall apart and go to new lows. There's no catastrophe there. You have no good argument for a catastrophic pullback in the market. That could change, but for the moment, it's not that bad. Even if we did pull back, I personally think we're in that 5 to 6% camp. We can have a nice little pullback. That's not the end of the world. It's not doom and gloom. How many people do you know that are like, oh man, this is going to fall apart. This is not going to end well because of the drama. So I leave this stuff out of this channel, but drama can cause you to feel like the market is worth less. And that's not true because the market is driven by the forward earnings expectations of companies, at least our beliefs at the moment. And that's why there's fluctuations. We believe companies will make a little less, a little bit more, but ultimately they will grow because that's what they're in business to do. And so when you see drama, what the Bud Light thing with the girl guy that was doing the thing with she's on the beer or he's on the beer, whatever you want to say, that's drama. That has nothing to do with the market. It may impact one stock. It really, hasn't really, but it may impact one stock. The comments about the people that want to compete with the men that want to swim with the women or whatever, you get what I'm saying. Things that have no impact, you may feel personally about that in some way, but it doesn't move the market. So careful, there's news and then there's financial news. And whether or not somebody's on a beer can or not doesn't drive what the market's doing. And I think a lot of times you see things like that. Maybe you agree or disagree on the political position of the world right now, the president or a senator or your state governor or whatever. Well, that's not moving the market. You may have a passion about that, but don't let that direct your investments and make you feel like my state is not what it was. My America is not what it was. That's a different conversation that doesn't really impact your dollars so much. And really where I'm trying to come from with this is, and by the way, my belief, as always, I learned this when I was a kid. I was fortunate enough to have a mentor, although I didn't know it was a mentor at the time. I was, young teenager, maybe even before that. And they were the chief of the Seminole Indians down here in Florida. Obviously a very wealthy person. And I didn't know I was looking up to this person. They didn't know that I was looking up to them or whether I was or not. But I heard them say a lot of things that I just remember over the years. And one of them was, we can disagree on politics and the world, but we can still be friends, right? It's like sports. And he used to say this often. I forget what team he was big on, but him and my dad were friends. And my dad was a Dallas Cowboys fan, and he obviously was not. And they would go at each other in a friendly way about the teams and like who they were playing and, we're going to beat you and all that. But they were good friends, And I'm pretty sure they disagreed politically as well, but they were friends. And I take the same approach. I don't need to share the same beliefs as you. We can still be friends, and I'm not going to hate you for believing something different than what I believe. It's totally cool. Like, where we separated from that in this life is really weird. But I start to get a little particular and pushy when a belief that doesn't affect the market causes you to do things with your money that's just emotional, really tough. So let's get down to it. Whether you know it or not, the stock market made a low, as of now, that's our low, October of 2022. And actually, it was October 13th down there, but we're now 6 months beyond that. And a lot of people look at the market and say, anniversaries of events, the 3-year COVID event and, flash crash and all this stuff. We look at that and we say, well, we've come some distance from that. Well, it's 6 months since we hit the low in the market, at least the current low. We were down 25% from highs when we hit that low. This was last year, right? And so what tends to happen is the market makes some kind of a low. It gets to a point where it's discounted and people go, well, that's a real value. And the buying causes the market to bounce. Well, that's what happened. But what tends to happen is the market makes an attempt at another low. And it's usually very quickly. We'll hit a low, get some kind of double-digit bounce, and come right back down and make a new low and scare the bejesus out of everybody, right? That's what normally happens. This is a rare case where there's only 12 other times in history where the market fell over 20%, made some kind of a low, then bounced and did not look back within a 6-month window. It refused to come back and hit that low. And if you know, the markets are very much historical looking. That's why I reference data so much. I'm not guaranteeing that it's going to happen again in the future, but isn't it funny how it just keeps happening? Because we believe the same things. We adjust to how things performed historically. So do algorithms, by the way. Algorithms drive the majority of the market. That's not a bad thing, but they drive it. Well, what data do algorithms have to invest by? It's all historical, right? So that's why that works that way. So this is one of a total of 13 times where the market within 6 months has not gone back and challenged a prior low within 6 months. I thought it'd be fun, and I did this on the closing beat, to see how the market performed going forward. Does it normally kind of challenge it? Does it just wiggle around, or does it go up? I don't know. So we took a look here. Let's take a look together. In the blue, so there's a couple things I'm trying to highlight. So in the blue, this is where we stand right now. So after hitting a low, the market spent 6 months going up. Not amazingly, but going up, drifting higher. There's only one time in history, I tried to highlight the negative ones because everybody always says, you cherry pick the positive ones. So I highlight the negative ones. One time in history where the market fell 20%, bounced, and then at some point 6 months later or beyond made a new low. Once. One time ever in history. That makes you wonder, right? If you're going to play the odds of investing for a 30-year window, would you bet that after 30 years you'd be higher than where you started or lower? You better bet higher because 100% of the time, within a 30-year window, the market is higher than where it started. Meaning there's no point that you can randomly pick on the market and say, go from that point forward 30 years and find that you would have lost money. In fact, the same is true for 20 years. If I can dig around here just a little bit while I'm talking, I'll pull that up for you. There is not one time in history. Does that mean that that can never happen again? No. That it can never happen, period? No, of course not. There's going to be an outlier. Enough data points will occur after decades and decades and decades. There'll be enough data points where surely at some point that's going to happen. But for the moment, here it is. Let's take a look. I'm sorry, that doesn't look very good. The probability that the stock market will be lower after 1 month over its entire lifespan is only 37%. So if you said, when the market pulls back next month, I want to get in, you have a 37% chance of being right. If you said, I'm going to wait 6 months and then I'm going to buy this market, you have a 28% chance of buying it cheaper than where you could buy it this very moment. And then just to bounce out here, if you waited 30 years, you will not be able to buy the market cheaper than where it is. If you waited 20 years, no chance. 10 years, you have a 5% chance of getting a discount. 5 years, a 10% discount. You see what I'm saying here? So when we look back at this data, well, of course, we want to know when there's a moment in time where the market could be in a better position. where should I be taking my money and saying, I feel like the Fed is going to get these interest rates wrong, they're going to screw everything up, and the market's going to crash. All that stuff was going on in here too. All of it. At 74, 70, 66 especially, all inside of here, all that was happening, and yet the market moved higher. So somebody got left in the dust. And what do we have right now? We're currently trending just below average. Average would be right about there at the top of that arrow if we were. We're not, but we're trending higher. And so for you to say, or your friends or family to say, I don't trust this market. I get those emails a lot, and I'm curious, so I don't just discount people's questions. I like to ask questions. So when somebody says, I don't trust this market and I want to move to something more conservative, I go, specifically, what don't you trust? Because I have all the data, and I'm about to spew that data all over you. But what don't you trust? And they're like, this president, he can't get a word in, and complete a sentence or whatever. Okay, but that's not the market, right? That's a whole different side. That's like watching Fox News or CNN. Go fight over there. But you're not fighting on CNBC and Bloomberg. You're not going to say, you know how silly you'd look if let's say they invited me on Yahoo Finance or Bloomberg, and they said, Dustin, are you bearish or bullish? And I said, I'm bearish. Why are you bearish? Because the president can't say words in a whole sentence. He just can't do it. I do the same thing. I'm not picking on the guy. You see how often I'll say something, I can't finish a sentence. This is because I'm thinking a million miles an hour. So you know how stupid I would look if I said that? So really question yourself about why you go, I'm not willing to buy the market's pullback, or I want to be in cash. I want to be in gold. If we're being honest, you have no argument for being in cash or gold. I'm not like sharing this kind of data with you to make you feel bad. I like sharing data, so I'm just going to keep doing it. But I'm sharing this with you to make you realize you better hit one of those black swan type events, that random outside of the norm scenario. And I'm not saying this can't be the case, but if you got to play the odds, you realize that's like, there are 13 horses in the race. I'm going to pick that one that always comes in last, man. He's got to win sometime. We eventually will, presuming he lives long enough, but it's not likely that they're going to win. What will that cost you in the meantime to doing that? Right? Like, just think about the odds of everything you're doing. It's not just me that says, look at these data points. It's the algorithms, it's analysts. Where do you think I get the data from? How I compile all this stuff together. I'm looking at what the masses are thinking and going, if that's where everybody's focused right now, let's look back at some of that history. They're all doing the same thing. There are people making decisions at Goldman Sachs, JP Morgan, all the Wall Street analysts, whether they're with a major prime brokerage or they're not, they're all making decisions based on data. And they got a lot more money than we have. Right? They're going to move things a lot more. How do you think, by the way, last thing, how is it that you think, what could it be? Oh, Netflix. Let's say Netflix comes out with their earnings. The very second they come out with earnings, it's down. How is that possible? I didn't have a chance to read the news. I didn't get a chance to make a decision. How on earth is it possible that Progressive, we talked about that on the closing beat, like, hey, if Progressive doesn't nail it and have great earnings, it's going down. The very second that earnings came out, it was down. How is that? It's because they're first of all, they're reading through the reports and assigning plus ones, minus ones. It's a really cool algorithm. But they're doing that to decipher the earnings. And then they're comparing that against history in a nanosecond. And the algorithms are saying, bam, stock should be lower. Based on data. So all of you that say, you can't go by historical data, there are literally algorithms that are moving the market based on historical data. You don't have to believe it, the fact that they do that, but you better want to participate, because otherwise your opinion and your dollars are nothing compared to theirs. So going back to the market real quick, this is the last thing. I know I said that already. Going back to the market, there's only one time in history that the market fell over 20%, then came back and made a new low after that, within a 6 month window, or after a 6 month window, right? Wow. that makes you think, right? Does it not make you think that if the market falls, that's an opportunity, is it not? Maybe I should do something about that. And again, I make no money if you buy the stock market or not. I could care less what you do. I'm passionate about the stuff and I like talking about it. So I'm going to keep doing it. But my God, think about the stats. You now know, and I showed all of them there, right? If over a 1 month period you think the market's going to be lower, the odds are not in your favor. It's going to happen at some point. They're just not in your favor. And when it does happen, you go, oh, that's the 3 out of 10 times that happens. Play it, man. Get in there and be a part of that. Be less emotional. Who cares what the president, vice president, maybe future president, let them go fight and do what they got to do. It's not going to affect the market at the moment. So that's it. I told you it'd be a short one. I lied. I'm going to get back to doing what I was doing. It's actually pretty late here. Might just call it a night. I appreciate you watching and putting up with my rants sometimes, but hopefully you find coming from a place of statistics, a place of education. I really like to teach and share data with people. So you don't have to believe it, but as long as you know that it's there and I'm helping in some way, I am happy. All right. Enjoy. Thanks for watching, and we'll see you tomorrow, right?